All right, doing great, Scott. Thank you. Jamie, how are you, buddy?
I'm good. I'm good. Happy Thursday to everyone. It's Thursday. That means tomorrow's Friday. Yay.
Yay, there you go. There you go. Thanks everybody for coming to my trading studio with special guest Jamie Hodge. And won't keep you too long, but we do have some interesting stuff to share with you today. I got something toward the end here. I think you would really are going to really find interesting. So let's just move on and let's talk about the disclaimer first. We got to go over this. Guys, we are going to be talking about some setups and looking at stocks. Just don't want you to think that anything that you hear or see today should be taken as investment advice. Okay, that's not our job. If that is what you're seeking, you might want to look for a registered broker, a RIA, somebody who can actually do that legally. But we're going to have some fun, and let's move on. Before we do, bear with us, all you regulars in here, while I tell all the people in here for the first time what you get along with an incredible, powerful software. We're really proud of our support, our education, and our training here. You can see there along the left side there of that slide, we have webinars every day, Monday through Thursday, all in the same 5 Eastern time slot. And then we also have the traders room. That's I'm sure many of you have frequented. If you haven't, you need to get in there because it's free for everybody. You do not have to be a subscriber to TI. We hope that you will become one once you see all the people in the room using it and profiting in the marketplace from it. And also, guys, let's not forget our Friday support session. Looks like we're going to be without Steve tomorrow. I think he's on a PTO, but we'll still be in there at 11 a.m. Eastern time. Guys, this is a great forum. If you have any questions, it's just a straight up Q&A. You guys come in there, we'll answer all your questions and demonstrate it for you as you view our desktop. So it's a great place to come to get any of your unanswered questions answered. All right, let's move on, and we still have more to talk about. And when it comes to training, we have TI University, okay? And what this is, these are scheduled classes, all at 12 Eastern time. Starts off on Mondays with 101, and you graduate each day until you take your last class with Jamie at 401. These are free. All you got to do is subscribe, and if you haven't taken that and you're still, been here maybe only 2 or 3 weeks and you're still finding yourself a little bit lost, get in there, guys. The people that have taken this have had nothing but praise about this class. And we have Q&A at the end of that for you to ask any questions. It's live. It's not an evergreen where you come and listen to a recording. All right. Brokerage Plus, guys, November 15th has come and gone. Scott is going to show a slide later on how you can still get Brokerage Plus and you can put down a deposit for us. And so what this is, it's a way for you to automate your trading, and in the future you'll be able to automate Holly's trading. So if you want more information, go to trade-ideas.com/beta, and Scott will have more info on this toward the end. All right, this is what we're going to talk about today, guys. We are going to look at the market recap as we always do. I'm going to pass it off to Jamie after that. He's going to go over some Holly. Holly 2.0 had some really good trades in it today. And anyway, we'll break that down for you. And then I was doing some just looking around here, and I tell you guys how to prepare yourself. I'm going to give you 2 examples today of when you might have prepared yourself for the long side, and I'm going to talk about maybe going into tomorrow how you might want to prepare yourself for the short side. So this is going to be a nice segment, and we're going to look at stocks that were holding up well. We're going to look at stocks that are near 52-week lows, and we're going to look at somewhere in between. And I'll let you guys kind of dwell on that to see which ones you think are going to come out best. But let's, I guess it's time to back out now and talk about the market recap. All right, let's pull up the spiders here. And as you can see, I got my little handy dandy tool that Steve has also now. So hopefully I'll grab that a little bit and talk about it. So what do we have here? Okay, what we have here is a market that has sold off, tried to bounce, came back and retested the lows that it hit last month, except for this wick. You can see it pretty much retested this very important level where we bounced on 2 other days. This one obviously went a little bit lower, but still you can see that's a little nice support line. And not only that, we hit it this day and then came back and hit it on this day right here. And what, I think the shorts may have gotten a little nervous, and of course more longs coming into the market saying, great, it's been a buy the dip for 10 years. Why should this change? Let me try it again. And thus we're having a nice little bounce. And look where we're going, or look where we have gone today. Well, not so much where we're going. We have come to this downward sloping trend line, going back to close to the highs of this year, or all-time highs, I should say. So this is a critical level here. You can see today we tried to poke through it and we could not. In the closing minutes, the bulls got nervous and took their profits. Maybe new shorts entered the market, but regardless, we closed far from highs, put in a little spinning top there. So we'll have to wait to see what happens. A scenario that looks like it may play out is this may be the signal for a short-term top. And if we do take out the low of today, tomorrow, then we could go back and possibly test these lows. If you're bullish, probably what you want to see is for us to go either tomorrow, take out that high of today, maybe go up here and test this 50-period moving average that's sloping down, or possibly just trading sideways for a little bit, just kind of consolidating and resting after this move. And I was no surprise today that this today didn't take off and go crazy just because after the big move we had yesterday. So we'll see what happens. We can take a look at the other markets as well, Qs. And pretty much the same there. I'm not going to draw it, but you can see, guys, if I drew a trend line, it's probably going to be, right at that level. Diamonds didn't quite get up to the downtrend, but this one has not sold off as much as the NASDAQ, of course, and probably not the SPYs either. Let's take a look at IWM. I haven't looked at that today. And same thing, it is kind of holding this 20-period moving average, but still a long ways away, from its 50. And you can just, if I drew a line, you can see it pretty much marries up to this downtrend going back to September. So it remains to be seen. I'm of the camp that I think at some point we're going to see lower lows. I don't know if it's going to be this year, but I think there's been a lot of destruction, technically, and we'll see what happens. I mean, gosh, I thought this, I think last time, and it didn't work, but we didn't go that much, higher, but nonetheless, we find ourselves pretty much right back in the same boat, pretty much the same levels as we were last time. So we'll see what happens. Jamie, I don't have too much more to add to the market recap. You want to throw your hat in the ring, or?
I pretty much agree with everything you said, Andy. And Steve was pointing out the other day, the old bouncing ball. The first bounce is higher, and you got this second bounce right after that little area of supply. And, look at the close. Look at the close today. Certainly not indicating strength. And, of course, yesterday and the day before, I think, especially yesterday, that gap and go, that was pretty crazy. Got a lot of people off guard, but just like you said earlier, to see the action today when we get into Holly as well, man, for all of you guys that already watch Holly, that just crushed it yesterday, the trio did, and today kind of mimicking the market, and just kind of a flat to slightly down day.
Yeah, I'm looking at the
hey Andy, I'm getting I might have problems.
Oh, okay, no problem. Yeah, I'm hearing some bandwidth issues. It sounds like on your end.
Okay, how about now?
It sounds better now.
Okay, well, like the little trouble box went away, so knock on wood. Hopefully we're good.
Oh, okay. If not,
But
Jamie, I can just take over and go through my stuff, and if you come back at some time, we can do Holly at the end, or if not, I'll just finish it off. But you
I
sound
think it
okay
was just
now.
I think it was just a little glitch, but I'll keep my eyes
Okay.
peeled over here.
Okay. Sounds good. Well, with that said, then why don't just while it's good, let's go ahead and pass it over to you, and
Yeah, let me grab
you
it here.
can.
All right, let me know when you have eyes on.
Okay, got them.
Okay, perfect. All right, welcome to my desktop, ladies and gents. Here to talk about a little bit about Holly and the trades that she put on today. As we can see, if I drag my strategy panel over here, we're currently looking at Holly 2.0. Of course, this 1.24 risk off is going to coincide with what we see in the channel bar up here. But if we just do the high level overview, Neo, the more aggressive of the bunch, down $1.23, while Holly 2.0 is $1.24. So kind of a wash there, plus a penny. And then Holly Grail spitting out 14 trades and pretty much just treading water at a whopping 39-cent loss there. But after today's action and the just immense pounding that the AI gave, it's it's not out of the ordinary to see this little lull in the action. Reminds me of, how many days did you have a really, really good trading day, Andy, whether the market was conducive or not? You might have just caught the few stocks that really ran. Well, you come in there the next day all riled up and ready to go, and then, you either get a blotter like this, which is what a sane, rational person would probably end up with, or been guilty of this many times in the past, you turn yourself into an oblivion. So once again, it kind of boils down to expectations coming into the day, especially after yesterday. Having said that, even though Holly 1.0, and let me just push this strategy panel off to the side here because the blotters are pretty large today, even for kind of a do-nothing day. But I want to point out some of the trade arounds today, which produce some really, tame chart patterns that once you get accustomed to seeing, you can really start capitalizing on these things. And yes, Trevor, I will explain the difference between risk off, risk on. And since we're getting quite a bit of new people in these webinars, I feel compelled to go into detail here. For those of you who are regulars, please bear with me. I think I sped through the Holly recap in my webinar on Monday and left a few people scratching their heads. So first and foremost, let's talk about Holly. What is Holly's superpower? Bringing us statistically weighted plays, right? That's the closest thing we can ever hope to get to certainty, is very good statistical probability. So that's all the heavy lifting that she does the night before, analyzing all of the tick data from today, so forth and so on, attempting to optimize and reback test these strategies till something acceptable makes the cut. Now you can see here we've got a risk off column, we've got a risk on column. We can also notice up here that Holly 2.0 finished in risk off mode. If I drag the strategy panel back over, Holly 2.0, right, there we go, risk off, $1.24. If you would have held everything in this basket today, instead of $1.24, pretty close, about $1.13, but we can see this equity curve here. If you were piling into everything and holding, at one point in time today, we were up close to 4 points, right? But we can see how quickly that equity curve degraded, right? Risk off never degraded quite so much. So what is risk off? Risk off is Holly simply obeying her rule set. There's 5 reasons why Holly can exit a trade. The first 3 basic ones are profit target was hit, stop loss was hit, or the timed hold expired. Those are the 3 basic ones. We give her the option to call out or to get out of a winner or loser early in the form of reduced risk or profit save. Now we don't see any profit saves on this one today. All we see are reduced risk. I think over here on Holly, yeah, okay, no wonder. I was looking at the wrong blotter there. All right, so I knew there was a profit save on here. I was like, where'd it go? So now we can see Holly 2.0. So the 3 main reasons: profit target, stop loss, and timed hold, and the ability to cut a winner or loser early in the form of reduced risk and profit save. These last 2 audibles that we gave her were necessary so that the system doesn't let a winner turn into a loser. right? Because if the profit target, stop loss, timed hold had not expired, say you might be up 50 cents. By the time that time hold expires, it might go negative. So that's why we give her the audible to get out early. Now, we've already, set up the fact that Holly's strong suit is bringing us these statistically weighted entries. We work with the machine, so sometimes we can make a better exit than Holly because it's pretty, just cut and dry. She's going to follow the rules that she's programmed to do on that risk management. So let's take a peek here at ADAP from Holly 2.0. Little big guy spit this one out today. One of my favorite smaller stock strategies. And we can see right here, everything is mapped out for us on the chart. As soon as I click on that blotter, then we can see the stop loss, the entry in blue, and profit targets. If, you know what, let me pop this back over to 15 minutes. And on this one, I don't believe little big guy, let's see, do we have a profit target on little big guy today?
It must have been just a timed exit. Yeah.
Nope. Yep. See, the field is blank over here, which is what I thought. Typically, little big guy does not have a profit target, just a stop loss straight across the board here at 30 cents. Now, let me get back to that trade here. So Holly calls the signal right here. All right. Now, we get into the trade with Holly. Let's see. Oh, that's my moving average. I'm like, oh, we got two blue lines. All right, so call it right here. What happens? Well, for those of you who've been watching Holly for quite a while, you know that sometimes, boom, they're off to the races. Hey, sometimes we get stopped out. Sometimes they act like they're going to stop us out and come back up. But this one just pretty much, boom, as soon as she called it, sideways action, which isn't necessarily a bad thing. There's a couple of reasons why I don't mind being in these, right, at all. And if I'm not in one and I see Holly in one going sideways like this, my ears perk up, my eyes light up, because there are some things that could happen. These things did end up happening in ADAP today. So Holly gets bored, so to speak, because the price action is not in the direction that we want it to go. We want it to go up. It's a long. What's it doing? It's going sideways, not going down necessarily, ebbing and flowing, in and out of profitability and break even, but certainly not making us quiver thinking that it's going to come down here and punch this stop, right? So we can do one of two things. If we're in the trade, we can sit and wait, and I'll tell you what to wait for in just a minute. And if we're not in the trade and we see 15, 30, 45 minutes later, wow, Holly's in this one, it's going sideways. Well, all we'd have to do is, the line's already been drawn for us in essence by the entry signal here. But once you see this little consolidation, when this thing gets, when it swoops down and starts to come back up and break this nice clean range that it's set up, it's already done it once here, and now it's doing it again here. This is typically how stocks go up, the little staircase action, slow and steady. Clearly there was a buyer in this one today. So if we're in a little bit here, great. If we're not, boy, this would have been a good action point right here when this range is broken and we can make a nice clean entry. Or if we're already in 200 shares, this is a great time to leverage that position and enjoy the rest of this move on more shares. That's why we're seeing now Holly got out right here at the shaded area, which represents risk on or risk off time. But 46 cents is showing us what would have happened had we held it until the close. So in a nutshell, risk on is simply holding the position indefinitely on an intraday basis, and it's always going to reflect that value, what you would be up or down now. So really great leverage that we could have put on this one. Of course, those are numbers that you can't necessarily see anywhere here. Let's look at another one here. This is a short TEO. Topping formation. Topping formation came in, let's see here, right at 66.3%. Anything coming out of there, it spit out two, slightly underperformed today for a 50% win ratio. So let's take another look here. So can't really complain with this entry. Boom, on that wick there. Now, depending on where you got it, could have been up here, could have been down here, or anywhere in between. But once again, a little sideways action, not near as concise and pretty as that long version that we saw, but still some nice downward movement by the end of the day. Holly closes this one out prematurely with a timed exit, so I guess it's not prematurely. I was looking at reduced risk there. So made it the duration for that hold time on topping formation. She closes it out right here. So we can make the decision. We're in the position with Holly. We see her closing it out in risk off mode. What do? We evaluate and go, yes. And of course, the longer you spend in the chair, the easier it becomes to identify things that might have a little bit more meat left on the bone. So in this case, we could have easily plugged out of half of our position and took our 9 cents with Holly. We set the second half of the position to a break even, back up to the blue line. Never made it back up there. So you would have had plenty of chances to exit and make more than Holly did in risk off mode. It's all about trying to capture some of this spread that develops here every day between risk off and risk on. A couple of days, I don't know, maybe 1-2 days a week, there's not a whole lot of risk on to be had because things just aren't continuing. But on the days that things are continuing, this is a good barometer to let you know that, hey, things are continuing. So on the next trade, if it looks good, you might want to take risk on the second lot, try to make a little extra. And just like on some days, there's not a whole lot of risk on to be had. We usually like to talk about trade arounds too, right? But Holly in risk off mode today was doing a pretty good job, if we look at these losers down here, at getting out of losers in a timely fashion. Gets out for 7 cents, would have ended up losing 15 cents. Gets out for 10. If you would have held it, would have ended up losing 20 cents. 5 and 23, 20, 24. There was not one on this blotter today where, you know, if you didn't take that stop, you would have been okay. On some days, a lot of the times, if the market is kind of wishy-washy, we'll notice them coming down to these stop levels, and sometimes on different days, we can use stops as decent entries. But of course, the market is ever-changing, and actually, Dan and I were talking about this earlier as we figure out what functionality to put into our Brokerage Plus module so that when we do give the ability for everyone to automate Holly signals, you know, what are the things that are going to have to be had here? You know, if they make it back up to the entry signal, would you like a second try at it? Right? So these are all things that we're discussing, and also, you know, paring them down and talking about what we're going to feed into the system. But today, since none of them ever really made it back up there, we wouldn't have had any additional signals. You know, some of them ebbed and flowed through this line here, which is another thing to point out. You know, depending on what type of trader you are, if you see one hanging out around this entry signal up and down, depending on what type of trader you are, you might have been able to pull off a couple of trades in there for nickels, dimes, quarters, things of that nature, right? And of course, everybody's a little bit different. Now, Andy, I think that's pretty much about it today.
Yeah, Jamie, will you show Gordon? He's asking about how would you size your investment per stock recommendation by Holly. So maybe you can show him how our AI is sizing real quick.
Yeah. So right now, I thought I had that column up here, but let's just find my shares column. It's hiding over here. Okay, let me grab it over here. Right now, we're just seeing a straight up point total, assuming Holly was in one share of each thing, right? However, we can do the following. We can assign a certain dollar amount per trade and go, okay, if I want to limit any of my losing trades to right about 50 bucks, and I say right about because once you get out, you might have lost 51 or you might have lost 48, but this is an approximation. So if I hit apply here now, then assuming the stop is hit, we would only be in the proper amount of shares that would result in a $50 loss. So now you can see in the shares column here on quarterback, if I was wanting to, or excuse me, not quarterback, but in BLX, if I only wanted to risk $50, I could have been in 113 shares. This automatically adjusts. And on this one, you risked 50 and you made 73.32. Holly close this one out. So you're risking $50, you end up losing 1169. But this way, the system says, okay, if you want to lose $50, assuming a stop is hit, it calculates the share amounts so that will be the case. The panel is also going to update here, the strategy panel. So instead of just seeing a point total now, if you were in all the trades, but assuming we hit all the trades perfectly today, you got all the shorts, you got all the longs, then in risk off mode, risking $50 a trade on 23 trades, it would have come out somewhere in the neighborhood of $163. Risk on, slightly less. So I think that was what you were getting at there,
exactly.
Andy.
Sure was. That's what I think. That's what he wanted to see. And yeah, it's a great feature we added a couple of months ago.
Yeah, so I do see a couple of questions here, and I don't want to hog up all the time here, Andy, so I'll pass it back to you in a minute.
Okay. No
How will Holly and Brokerage Plus do with getting in short with the uptick rule? Well, I mean, in essence, what stocks are on an uptick rule anymore, Andy?
Yeah, very few.
Pretty much everything is shortable. The big question is hard to borrow, right? That's where you're going to run into issues. In other words, short comes out, even if you're automating, it tries to short it, can't short it because it's on the quote-unquote hard to borrow list. There's just not enough shares and margin accounts out there to loan out. So if it's on the hard to borrow list, that's just something that we all, get stuck with. And it's a bummer when you miss a good short because it's on the hard to borrow list. So I hope that, answers that question. As far as what Lynn is saying, as we scale our customer base, do we expect aberrations to performance based on the weighted effect of Holly's trades? Well, these numbers are going to look pretty much the same as they always do because these strategies that you see in Holly 2.0 today, and let's count them up, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 strategies made the cut after the analysis was complete last night. That's 11 out of approximately 35 strategies that were being fed the fresh market data, tested, and optimized. And only these made the minimum score on our proprietary scoring method to make the cut the next day. Sometimes it gets slim. Sometimes you see these modules show up with maybe 2 or 3 or 4 strategies on the low side, right? So it's all about the statistical probability of these things being there in the marketplace. So these will all remain as they, the ever-changing things that they've always been. As far as what type of impact in the real markets that this activity, once a handful of people, when I say a handful, I'm talking about a few hundred, 1,000, start using this technology, man, I could sit here and hypothesize all day. But I could be wrong and I could be right. We talk about this all the time, and we've all got front row seats. Still against, fairly liquid stocks, there's a lot of volume coursing through these things. Of course, you're going to have the thinner ones come up, and of course, we all know what happens when you get a low floating stock in there that usually doesn't do a whole lot of volume. Whether it's robots or humans trading it, you're going to get a lot quicker, bigger moves to the up and the downside. Still a robot making your entry is faster than us looking at it, sizing up the chart, then making the decision to hit the buy or sell button. It might only take 2, 3, 4 seconds, but hey, when it gets done in a few milliseconds, that's quite a speed difference. And unfortunately, Paul, we do not track futures here at Trade Ideas. Therefore, Holly does not track futures either.
Correct.
Alrighty, sir.
Maybe in the future, no pun intended. Yeah.
Yeah. So I guess one more trade to point out here did come from the old gray nag here, Holly Bell. Even though she finished down today, here's another one of those really nice chart plays, man. I mean, your risk just isn't that big, even with the Holly assigned stop. But if I was trading this manually, I mean, it's even smaller, right? And sometimes this is going to happen. So when you see a real simple pattern like this kind of coming into play and getting this sideways action, and then it took a few breathers here, and then this, boom, went up there and cracked it. I mean, getting this based on this, something that we can only do visually. You can't fold it in here but the only reason you're in it is because, or you're alerted to it, is because it's got a high probability of going up. And then you compound this on top of it. So that's about all I got, Andy. So if you're ready, I'll kick it back over to you.
Oh, yeah, great job, Jamie. Yeah, we've got plenty of time.
All right.
All right, let me go ahead and reduce the size of this daily chart here. All right, guys. Well, what I want to talk to you about to close this out is, and you've heard me talk about this before, is preparing yourself for the next day. And that's quite all right. I mean, you have to be careful that when you're preparing yourself that you don't get preconceived notions. It's very easy to do. I've done it. Every trader has done it. And what I mean by that is, you know, say for example, this, what I'm going to talk about here in a little bit is the market's had a nice run. Maybe you're coming into tomorrow thinking, you know what, I think it's going to be a good day for shorting. I'm going to prepare myself with some shorting strategies here. And it's easy to get so much a conviction that you get stubborn. And even though the tape starts going against you, you're arguing, hey, this is not the way it's supposed to work. You know, it's run right up against a downtrend. This should be rolling over. I'm gonna double up. I'm gonna double up, and it's very common. And so, but at the same time, you want to prepare yourself. So it's a fine line. It's a very fine line, preparing yourself and not having too many convictions, because it's your job as a trader to react, okay, and not predict. So what I want to talk about today is like going in to this day right here on Friday. Let's see if I can turn my old pen on right here. This day right here, okay, we had a nice little ledge right here, and we've had a nice little level of support. So over the weekend, you might be thinking, well, you know, I'm gonna look for some opportunity, you know, coming in to Monday, just in case this level holds and we get a nice bounce. And we did. Cut this off. We did get a nice bounce right here. So what I did today is I'm thinking, okay, what do you want to buy? You know, what do you want to look at? You want to look at stocks that have really been holding up well. In a strong bull market, you know, that thesis works a lot, works probably the best. But, you know, in this kind of bearish tape we've seen over the last few months, maybe it's not something we want to focus on. But we can test this hypothesis. So let's look. What I did today is I pulled up the composite rating going back to this day right here, okay? Going back to this Friday, where we were sitting on support, and you're doing your preparation, and you want to find some stocks to buy, okay? So this composite rating looked like this in the middle of the day on Friday. So let's say you're doing your homework, and let's look at some of these. These are stocks, this composite rating for somebody that is new and doesn't know what it is. It's basically a rating based upon a bunch of technical metrics and some fundamental data. So it has a lot of components in here that we score, and you can see this IIPR back on Friday would have been this day right here. It scored very high. It's 100. It was at all-time highs. It was at lifetime highs. And so what I wanted to show you is, let's take a look at some of the stocks and see how they reacted since the market bounced, okay, on this Friday. A nice bounce we've had. So let's look at the strong stocks first. IIPR, it didn't work out too well. Vanda, well, it's pretty much it's kind of been going sideways since that day. Not a whole lot of action. FFIN, same thing, you know, maybe flat since Friday. Now remember, these are the strongest scores in the market going in on Friday. And I'm sitting here showing you one after another where, gosh, there wasn't a whole lot of movement there like we've seen in the market. So you might want to ask yourself, you know, in this current market conditions, that's a buyout, you know, would I be best served, you know, playing some of these stocks that are holding up very, very strong? There used to be, we used to say back when Jamie and I were trading in the olden days, boy, those stocks are holding up when this market's weak. Man, let's rush in and man, we're going to buy those as soon as this market turns around. Well, Not according to this data I'm looking at right now. I mean, a lot of these stocks, they didn't do anything, and some of them actually went down. There's another one that pretty much hasn't gone anywhere, and if anything, it's gone a little bit down. So I'm going to ask myself, okay, what about stocks that are trading, near their all-time lows? So instead of jumping back and forth and finding stocks at their all-time lows, I created this little three consecutive days down. And I'll just show you the configuration real quick, and I will share this with you at the end. Just a top list, okay? And I'm looking for stocks that are down at least 3 days in a row, price between $5 and $100, average daily volume. I'm looking for liquid stocks when I did this. Position in 20-day range, I'm looking for it to be at the lower half of its 20-day range. In other words, I want it to not just pull back a little bit and maybe at least be, in the lower half of its 20-day range. And also, but I want it to have putting in a fight today. In other words, this is position in range. This is looking at today's action, which with me going back in historic time right now, we're looking at Fridays. When I pull these up, we're going to be looking at Friday's data. So anyway, let me show you and take a look at some of the charts. So what I've done is I've sorted this by score, okay, with the best score on top. All right. So let's look at. So I know if I go down here, I'm going to find some ones that are probably in the lower portion of their 52-week, low. So let's take a look at these based upon their score. And I'm going to show you how score can be so important when you're looking for opportunity. So these are stocks on that Friday, which was right there, I believe, that look pretty hideous, but you may be thinking, well, you know what? These are beaten up. I bet you if the market takes off, these are going to run. So let's just take a look at them. Here's CTT. Let's take a look at Unify. Nothing going on there. BDC, hadn't done anything. So you got to be real careful when you're bottom fishing, guys. I mean, even though a chart may be basing, look, a lot of these were basing, and yet we've got a nice little bounce in the market, and they haven't done anything. And a lot can be said by looking at the score, because if these scores, we only track, our score only ranges from 30 to 100. So if they're down here, anything below 50 is going to be, they're probably, not only do they look bad technically, they're probably pretty bad fundamentally as well. BDN, there's another one. SNH, not much happening there. Probably getting ready for another leg down. So I think this one had a little bit of a bounce, but not much. So I think it's pretty clear here. I don't think bottom fishing is the answer. Finding stocks that are just really beaten up. Okay, let's face it. Once again, let's pull up the market. We've had a nice bounce in the market from here all the way to here in 4 days. I want to get in something, where I don't sit there and let it go against me, or it's not moving in this, when the overall market's having a nice little move here. So that's not a good risk reward for me, but I'm sitting here showing you one stock after another that's had a pull at least 3 days, but they have this low score. They're not going anywhere. All right, so now let's take a look at some of these with a higher score. Same parameters, okay? Remember, these filter sets are still the same. It's just these scores are higher, which means they are going to be holding up better technically and probably have some pretty good fundamentals to it, okay? Remember, our score reflects, it's very sensitive to short-term price movements, okay? So if the market is really kind of been selling off as much as it has lately, 10 to 12%, you're not going to see a lot of scores in the 90s, okay? As a matter of fact, look at there. This is on Friday. You only saw a handful of scores that are above 90. So when you see a score of 66 in a market that's trending down, you can't think of it as a bad score, even though if you got that on a grade in school, that'd be a bad grade. It's all, conditional on what the market's doing well, because when these stocks get below certain moving averages, their score is hurt. But let's take a look at some of these. Now you're talking. This is the kind of stuff I want to see. This is something right here, barely below its moving averages, hanging on pretty well relative to the overall market. And then we got a bounce in the market, and look at the nice bounce there. XLP, another one. Hanging on pretty well. I mean, looks almost identical to that FSTA, the one above. And boom, got a nice move with the market. FE. Yeah, that didn't work. It worked for a little bit. Looks like they may have had, I don't know, some news or something, but that one, oh, it's a hydraulic power generation. It's probably getting affected by that. There's one right there, CVS, beautiful. There's Friday right here, okay? Score of 57. That sounds like a bad score, but guys, once again, you always have to keep the backdrop of the market, okay? This stock now is, look at the composite rating, is 82, okay? So a couple of weeks ago, this was at 82. So when you're looking for opportunity and you see these scores around 50 or 60 when the market's been selling off, they could be possibly really good candidates, for a buy if the market bounces. Yeah, not a little bit there. There's Friday, so you had a little bit of an action there. A little bit there. Wooba, I don't know about this, a China stock. Yep, that one didn't do a whole lot. We were getting our scores are getting a little bit lower, so we're not getting the action as we did up here in the scores where they're in the 50s and 60s. That one had a pretty decent bounce there. But what I wanted to show you, this one actually had a pretty decent bounce. So even though these may look awful, if you look at the lifetime of the stock, it's probably not going to be as bad as some of these ones that you saw back over here. Like that, that's just god-awful ugly, god-awful ugly. You can see the difference there between that stock and say something like, well, that is actually pretty ugly. I'm not sure why that one's, it's got some decent fundamentals. I'm not sure why that one's scoring as well as it is. But it's interesting, guys, because I think you want to keep this in mind, because a lot of people will suggest, hey, whatever's holding up when the market is selling off and the market turns, you want to buy that. Well, I think I just kind of disproved that theory based upon what I'm looking at here. These were stocks that were all strong on Friday that are really not doing anything. So this is what I come away with on this. I think what you want to probably avoid, and when you have bearish market tape like we've experienced over the last couple of months, when you do get a bounce, okay, you're tempted a lot of times to go in those stocks that have been really holding up well. Now that may work in a roaring bull market, okay, but when the tape turns, and there's a logical reason for that, okay, think about all these traders that may be sitting in those stocks that are holding up so well that are maybe wanting to get out, and they know they can't pound the bid when the market's selling off. They'll just drive, and I'm talking about big positions, not just traders. So what they do is when get a bounce, they're using this bounce, their position to scale out and get out while the market is running up and buyers are coming in. Whatever the reason is, I mean, I went through several of these, and you guys can see a lot of these stocks that were holding up the best in the overall market did not move, when the market bounced. And I think you really ought to be careful, definitely playing the ones, that have been beaten up badly. In other words, picking it's not really a falling knife, a lot of these, because they have based, but you're still bottom fishing. And I don't think there's anything wrong with bottom fishing as long as and I've done plenty of it, but make sure you have a reason to be doing it, not just because it's sold off a bunch and it's much cheaper than it was several months ago. That's not a reason to buy a stock. There's technical reasons to do it. Maybe if they start reversing them with volume is a good reason to do it. But don't think just because a stock, it's a tendency for a lot of traders to think, wow, this stock was trading at 18 over here, I can get it at 14. And I mean, it's not the way it works. I wish it was that easy, but it's not. But anyway, yeah, if I think, if you use, and I'll share this right now. Let me put it back on real time. There's probably not going to be a whole lot of data in here right now. Oh, look there, the SOX. Bear, it's a SOX bear actually. There's another one that'd be dangerous to play. These are all pretty low scores. But anyway, I'll share this one. And the time to look at this is not like where the market is now, because if they sold all 3 days in a row with the market, you know, bouncing like this, I probably don't want to pay my whole lot of attention to this. But if I see, you know, the market pull back, maybe dig in, start putting in some support again, maybe then you go to this and look for some opportunity. Which, and I will share this, guys, but I want to talk about what we're looking at now. So with that being said, what you might want to do is with the spiders, okay, you know, look where we are now, right up here, you know, running right into this level, dropping line, this, you know, tomorrow, maybe a day where you prepare yourself for some possible shorts. The way you can do that is, you know, you could probably take something like this and flip it. Let's take a look, see what happens. Okay, the way we do that, for those of you guys seeing this for the first time, you can duplicate a strategy and you can come in here and configure and just tap on the word, come on, flip. And now I just flipped all these filters inside this. Now I got stocks that have gone up 3 days in a row, okay? But unlike the ones that were the day where they traded in the upper 25% of their day, now they're trading in the lower 25% of the day. So this is where you may take this, and going into tomorrow, maybe you can find some opportunity for a short. This is the way you can use our software, guys, for homework. It's very powerful when you come in and all you really have to do is maybe, you know, put some price alerts. You say, wow, look at this. You know, this looks actually very much like the market. So, or better still, maybe go down these ones that have poor grades. Be careful with the ones that are on 52 weeks lows, though, because you may get the same reaction out of those as you did with the ones, you know, near 52-week high. But nonetheless, what I'll do, guys, I just flipped that, so I'm not going to share this one. But what I'm going to do is I will take this one right here, and I'm going to save and share it for you guys. And what I'm doing for you guys in here who are checking us out for the first time, we're able to share our strategies with others. So I can just put this in the chat panel there. As you guys, it's in the chat panel of your GoToWebinar interface, and they can just click on it. And now they'll have access to this alert. All right, well, I hoped I've shared some decent insight today. Yeah, be careful on those bounces, only going into those stocks that are holding up, because I think we've seen today that that those weren't the ones that really bounced. Jamie.
Good stuff, Andy. Hey, real quick here, we still have a little bit of time,
sure.
And one of the attendees was asking if we can, you know, make the Windows watch just a certain list of stocks. I think they're referencing healthcare stocks, but the answer is yes. We can easily create and populate custom lists just by the old-fashioned way, tools, and then symbol list. A little panel will pop up. This is where you can create and populate your lists, and then you can take those lists and have any window, whether it's a top list or an alert window. You go into configure and you point it to that list, and that's one way of doing it. Of course, we've got some other methods that we don't have time to go into detail with now, but that reminds me, tomorrow's Friday, so yeah, we're going to be conducting that support webinar. So if you have the time to do so, you can pop into that webinar. 11 a.m. Eastern is when it begins, and we can go over that functionality for you. So come on, come all.
Yes, by all means. Thank you, Jamie. All right. Well, if there's no other questions, I'm going to go ahead. Let me see. Hold on. Is it possible to choose one? I'd like to add some windows to my layout. Yeah, Martin. It really is. It's all you have to do is let me just go ahead and let's see if I have to save anything here before because if I go to a channel, it's gonna, okay, I think I'm good. All right, so let's say you were in the surge channel, okay? And if you see something you like in there, let's say the action is heating up. This is a popular one. Let's say you want to save that. All you have to do is right click, save or share to cloud, save. And now I can go back to my default layout. And if I wanted to pull that one I just saved in, it's going to be right in my cloud, the top one. And I can just click on it, and lo and behold, I have the action is heating up. So I hope, Martin, does that make sense to you? That's how you do it. You just go to that channel and save it to your cloud. Once it's saved to your cloud, you can pull it in anywhere you want to. Yes, Justin, hang on. Scott is going to give you a discount code in just a minute. All right, thank you, Bullseye. I appreciate it. Thanks, everybody. Yeah, Lynn, for dividend, yeah, those, email me, Lynn. Just send something to info@trade-ideas.com. Scott will show you here at the end where to email it, and I'll get you that. Yeah, David, maybe we'll do that in the future. Yeah, he's talking about making the score column into the channel windows. Yeah, that's maybe a good idea. We may have to do that. All right, let me pull this back up. Scott, if you're ready, just come on back and we'll let you walk them out.
Let's a couple items on the way out. Brokerage Plus. We're releasing Brokerage Plus in January. If you did not already subscribe to Premium before November 15th, here's how to get it. Go to trade-ideas.com/brokerage plus, read about the details, put in your deposit, and then as soon as we release it in January, we'll charge you the rest, and you will be added into the Brokerage Plus pool, and you'll be able to auto trade. AI is also coming to Brokerage Plus early next year as well, so it's a great time to get into it. The prices of it is only going to end up going up after we release the first wave and get that going. There is a lot of great content that we have from our summit that we had on October 20th. Check it out. A lot of people have been saying that listening to Kunal Desai's presentation about trading the open was a big help. JC Parrott's is also really well received, and Brett Steinberger has one about improving your cognitive capabilities while you're a trader. He's a clinical psychologist that trains people that manage hedge funds and prop desks. Trade-ideas.com/summit video 2018. Just go ahead and do that, and you can watch all the videos, bookmark the page, enjoy them at your leisure. Lots of good content. There's an ebook that's been very apropos this year. Andy and Jamie both contributed chapters. Go to trade-ideas.com/ebook to get it. It's free. It's 5 ways to win in a post-BTFD market. It's got 5 strategies for how to keep yourself winning when the market is choppy. And it's been that way since February when we launched the book, so it was timed well. Podcasts. We do podcasts weekly, and there should be a new one up tomorrow. Search for Trade Ideas Podcast in your favorite podcatcher and add it as a subscription. And then you can check out the archives too. We've got some good guest ones. We've got a discount code for you. I know some of you are waiting for this. We're going to want to use it for the end of the month though. Alpha Studio, all caps. Go to trade-ideas.com/price and plug it in when you go to the checkout. Those of you that are already subscribers and want to jump onto Premium can also use that code, but you're going to log into the homepage. Just go to trade-ideas.com and click on the login in the upper right, and then go to change your subscription and plug that in when you're doing so. Any questions, email info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We've also got at Trade Ideas. Facebook.com/TradeIdeasPro is the place to go on Facebook and like our page so that you can see our updates and share them with your friends. Thanks, Andy and Jamie. See you guys next week.
All right. Thank you, Scott. Thanks, everybody. See you tomorrow.
Thanks all.
Bye. See you tomorrow at the support webinar. Bye-bye.